This is Rod Kusanen, Spooman for Risk. Today's video we're going to focus our attention on the subject of divergence. On our website, RSKsys.com, you will find a reference to divergence right here. I would recommend that you go and read over the rules for the three types of divergence, as we're going to talk about each of them in our video today. We'll be looking at the Spoos and the VIX. The first kind of divergence we're going to see is a type 3, where we get a higher high on the Spoos, a higher low on the VIX, and a higher low on the DPO. The next type of divergence will be a type 2, where we get a lower low on the VIX and a higher low on the VIX DPO, but a lower high on the Spoos, where this implies the VIX is exhausted and the trend down on the Spoos, in fact, has already begun. So now let's take a look at this. We're looking at October the 23rd, 2009, 1 minute chart of the VIX and a 1 minute chart on the Spoos. Now look at this. Right here we have a new high on the Spoos. That corresponds to this new low on the VIX. But this morning, at the open, the Spoos went higher here. But look at where the VIX was. The VIX was at a was at a higher low. That's a type 3 divergence. And as a result, a short trade. Now a few minutes later, the VIX attempts, the Spoos attempt another new high. They don't quite make it. It's a lower high. But when you compare this little move here on the VIX, okay, just right in here, from where it opened to this point, the VIX is now at a lower low compared to where it was previously. Comparing this point here to this point here, this is lower. Normally what we would expect is that the Spoos would be higher. Lower low on the VIX, higher high on the Spoos. That doesn't happen. In fact, you just only get a lower high. That's a type 2 divergence. Exhaustion on the VIX, another reason to short the market. Now, the VIX starts to move up. And what you get here is again a type 2 divergence. We get a higher high on the VIX, a higher low on the Spoos. VIX is exhausted. If you're not already long, you need to be long now. Shorting it here, going long no later than here. Now we'll show you that in fact there was some divergence here, as evident on one of our other charts. Now look at this. Here's your long. VIX is now moving down. Spoos are moving up. Why do you want to short it here? Because of a type 1 divergence. The VIX hits 2133. That's the low. Now it tags 2133 1, 2, 3 times. Okay? 3 times. But now look at the DPO. I can't quite get the DPO on the screen here. So I'm just going to tell you what the DPO is registering. The DPO right here is a negative 0.19. Then it's a negative 0.18. Okay? When it went from negative 0.19 to negative 0.18, where the Spoos are at the same price, that's a type 1 divergence. Opportunity to short. Now look at the long trade here. New low on the Spoos. New high on the VIX. But look at the DPO. Here compared to here. Major divergence. Major divergence. And then look at it again here. New high on the Spoos. New low on the VIX. That's relative to this move. But look at the DPO. Here compared to here. That too is divergent. Time to short. And then finally here, okay, got to register the value of the DPO here. And it's a little hard to see. It's a little hard to see. But you've got another type 1 divergence going on right here. Now on our chart that tracks divergence, we're going to show you these 3 places here, okay, right here, and right here, where we have divergence. So we're going to look at the times of about 1022, 1022, 1308, and 1440. Here's our divergence chart. When the bars are colored blue, it indicates VIX divergence. And here we are at 1022. Spoos are just about at their bottom. Blue means VIX divergence. 1308, VIX divergence. And then 1340. Right in here, VIX divergence. Okay? So we're able to automatically show where divergence takes place using a different chart. So it's done for you. You don't have to keep track per se. But it's good to know what you're looking at and why. Now we plot divergence on the ES itself, even though the divergence is coming off of the VIX. We have a unique method of plotting that from a different data feed, plotting it right onto the ES. So, just a quick review. Shorting it up here, right up here, or at the open, down to this point here, is roughly 4 points. 14 points. From here to here, 5. From here to here, 10. From here to here, 4. From here to here, 6. Add them up. By simply looking at divergence and knowing how to read it, you can really, really do well. This is Rod Kusin, Spooman for Risk.